Canada's inflation rate rose sharply last month to 2.6%. That number is much higher than the 2.2% mark economists were projecting. It's also a sizable jump from the 1.9% increase that we saw back in January. Business analyst Kris McCusker is here to look at those numbers. And Kris, why such a big increase this time?
Well, in part, it was the tax holiday that ended in the middle of February, the federal tax holiday, and in some provinces, we saw the tax come off as well. So that really made a difference in, common items, things like restaurant prices, alcohol prices, gas prices also moving higher, so that was a factor as well. And without that tax holiday difference, the inflation rate would have been 3%, and it hasn't been at or above 3% since the end of 2023.
Well, we just saw an interest rate cut from the Bank of Canada, and that's the lever that the bank uses to try and slow inflation. But we have a tariff war. I mean, what kind of wiggle room does the bank have here?
Well, it's interesting. The wiggle room is less so now with this inflation data, and it really puts the April 16th Bank of Canada interest rate announcement in play, so to speak. There was an expectation, about 50-50 chance, that we are going to see another cut, and that has come down to around 30% today, so a little less of a chance that we see a cut again because of all the things you mentioned. The higher prices, the tariffs that potentially could bring higher prices, and then interest rate cuts could also potentially bring higher prices. So less likely to cut now.
Thank you, Kris. I appreciate it so much.
Okay.